All right. What is up, traders? What's up, tycoons? Super excited for today's video. We're going to talk about how you guys can potentially quit your day jobs just by simply trading one ticker, right? And the ticker that we're talking about is going to be the S&P 500. Now, we're looking at the futures chart right here. Okay, you guys can trade futures. You guys can trade options on the SPY index or the SPY ETF or the SPX index. Either or is fine. And really what I've been focusing on is leaving the morning alone, right? Just completely ignoring the morning. And it's something that's really helped me improve, right? You have all of this structure here. And you can start to see when things are starting to develop and where they're coming from, right? If you're trying to simply trade, the first 30 minutes of the market open, you don't really have the structure that you need. So we're going to break down all of that and how with one simple trade, you could have made anywhere from $300 today to $3,000, just depending on, what your account size is. And the reason that I talk about the S&P 500 and the SPY ETFs and the SPX index is because it's got the liquidity that you need to scale up, right? So you can start off with one contract, right? Practice, put some skin in the game. You can scale up to 5 contracts, 10 contracts. And then when you really want to go big into it, right, you can start purchasing 100 contracts at a time. And it has actually got the liquidity for that. And you can even scale up from there as well. So be sure to smash the like button, subscribe. We'll get into it. And so, we can look at the timeline here. Okay, this is the market open. Right. And so we're kind of just letting the market play out. And after, the first 30 minutes or so, the first hour of the market, we see we have a little area of demand, right? We see that, the market is coming in here and basically putting in some support. So we can draw this over, put a nice little box here. All right, we see pre-market, there seems to be some type of overhead supply here. So we can just draw this over and we've got some quick, supply and demand zones, right? Very, quick, just rough drawing. It's not precise, but you see we have overhead supply here. We have, demand down here. And so now what we're going to do is we're going to come and use this to our advantage, right? So we see the market starts to rally all of a sudden. And what do? We come into that overhead supply and actually pull back, right? So, this could have been a trade opportunity right here. A lot of people will tell you that this is a double top, right? Because we have the top here and then we also have the top here. But, that is a common misconception, okay? A double top actually occurs once you break a neckline, right? So you would, in a sense, have a top here and a top here. And, the symbols, the tickers would do something like this, come up, right? And then come back down and then form a double top. And the double top is actually once you break through your neckline here, right? This is actually, your textbook double top is once you come up, reject in that overhead supply zone, and then break through the bottom. And you can see here, if we wanted to say, we had some type of a neckline, it's not very clear where that neckline is going to be, right? Is it going to be here? Is it going to be here? We see we don't have downwards continuation, right? We see we don't come from a downwards move. So going back to the theme of, really just letting the market develop and get some structure, this is right around, towards the middle of the day. This is 11 o'clock Eastern time. And we see we're rejecting, this overhead supply zone here, right? We were to just roughly draw that in. And then we remember that we have, this demand zone down here, roughly right here. And so these are going to be, areas of interest to, take profit or potentially, get into trades, right? If we can enter into them. So what we're seeing here at the moment, right, is as this is starting to develop, I wanted to see this purple line is VWAP, right? Are we going to hold support at VWAP? And oftentimes you'll see some liquidity grabs, right? It won't necessarily bounce directly off of VWAP, but what you see is you see demand step in right around here, around the VWAP. Let's say that there's some traders who are entering in exactly at the VWAP, right? And there's not enough liquidity to push the move up higher. What they'll do is they'll come in here and they'll stop some of these traders out and they'll push, the price 5-10 points below, where they know a lot of retail traders are entering in. Now they have liquidity. We push up, but look at what we do when we push up. We actually establish a trend now, right? And we're having a high here and a lower high. So once I identified this, right, and I see that now we have a trend of making lower highs, because here we were trying to make higher highs, but we couldn't really do that, right? We kind of formed a double top. Here we have a nice trend of, high, lower high. And so what I did was I simply just drew a trend line, connecting, and we can see that we touched the trend line, 3 times over here, 4 or 5 times over here. And what do? We actually break this trend line. And this is a very, simple scalp. on the 5-minute chart, and really just focusing on how this is a 5-minute chart, we basically see we have 1, 2, 3, 4, 5, 6, 7, 8, 9 candlesticks, all going lower right here. So that's about 45 minutes. And in that 45-minute time period, you could have had some really nice profits, right? If we were to take a look at S&P 500, put options, right? Because puts are going to be, options betting that the price is going to go down, right? We look at the start time of this. Once we broke that trend, that was at 1250. We'll go ahead and come in here and maximize this sell real quick for you guys so you can see. And this is active trader over here. And basically you can see the value of your option contracts, right? So we take a look, and 1250 is going to be right here at this moment. Okay, 1250 right here. And we can take a look and see, how much the contracts went up, right? So they were $30 a piece, $32 a piece right here. And then from the lows to the highs, they actually rallied up over 140%, up to $78 a contract, right? Really, really big gains. So if you're coming in here and you can do this with a small account, without having to risk a large amount of capital, and go from, $320, right? If you buy 10 of these, and then, you don't have to be a perfect trader and sell all the way up here at $78 a contract. But, whatever your own profit goals are, whether it's 20%, 50%, oftentimes you do want to let the chart tell you, where to take profit at, right? And so if we were to go back and to maximize this sell right here, okay, and we establish some overhead supply and demand zones, right? Here's our little demand zone. Here's our little supply zone here, and you can see what happens. All right, we break through here, we break through our trend, we break through VWAP, and we push down into that demand zone, and then we start to see buyers step back in. So, as I mentioned before, these are the areas where you're looking to take profit or, start positions and enter some positions. We get the trend line break, we ride that down for 45 minutes, and boom, we go ahead and take profit. Or, oftentimes in my case, I have these EMAs here. You can use these as a take profit. Once we come back up and touch the EMAs, you can go ahead and take profit there. Or, you can have a trailing stop loss, however it is that you like to do it. But I just wanted to share this simple trading strategy with you guys. Wait till, the middle of the day. Okay. Don't be so focused on, always having to try and trade the open. Let some structure form. Once you see some structures, see if you can identify a trend, right? That's what we did. All right. So to break things down, what did we do? We identified the structure, right? We identified the supply and demand zones. Okay. And now, it's right around the middle of the day here, 11:45. This is 12. Okay. And we want to see, are we establishing any trends that we can trade? And the trend that we found in this case was going to be a high here and then a lower high here. And we broke this uptrend line, and that's your scalp entry. That's your scalp opportunity on the close, right? Once we close below that trend line, oftentimes people will get tricked, okay, with, a candle that ends up turning into a wick, where it'll come down below and it'll seem like it's going to close there, and then it actually shoots back up, and you end up seeing a wick there, and you see the body close above that trend line. So that's definitely an important part to remember. All right. And so real quick, everyone, I do want to give a shout out to my newsletter. It's completely free. There's a link in the description and the comment section down below. If you guys are fans of free trade ideas and trade setups going straight to your inbox, oftentimes this is content that I'm not necessarily putting out on YouTube. And also, I go over more than just trade ideas. There's also really good investment intelligence in here, hence the name. We talk about yield curves, how to navigate the yield curves. We go over a lot of myths in the market, and breaking down some really good things. If we take a look at the energy versus tech chart, we talk about some energy charts. We talk about the XLE, XLK Tango. All right, this is basically the dance between energy and tech stocks, the portfolio play. A recent one that we did also, going over the 4 pillars of the market, breaking down, why those are so important, how they're all interconnected, and, basically how we use this to our advantage to help get an idea of some of the market internals. I'm putting this out. It's completely free. So if you guys are free of, or fans of free, valuable content, then I definitely recommend signing up and subscribing for it. And feel free to share it with someone who you think may enjoy as well.